All right, folks, good morning and happy Monday. Here we are in what we do every Monday morning and just taking a look at the market, kind of getting a game plan for the week. So here we go, going straight into our E-minis here. So let's maximize this sell. We're going to get out of the 5 minutes. We're just going to go straight here. Okay, so this is a really interesting candle for me already today. So what we saw was we actually saw a limit down 4 minutes after the open, so we can go to that 5-day, 5 minute. So you actually see right here, so we crashed and then we had a limit down. And so all of these candles are 5 minutes that where trading was not happening, okay? And now we've just been kind of a slow grind up a little bit. We're still down 2.87% on the day, but what we see here is we see some level of buying power coming in. Now, let's talk a little bit about kind of the shutdown and the economic lockdowns and stuff. It's my opinion that we've priced all of this in. Okay, so one of the reasons why we see such massive candles is that the market is working on pricing in what a longer term economic shutdown due to the COVID-19 novel coronavirus. We've been pricing that in, and so what we're seeing is maybe perhaps some level of buying power come in. I like this, right? Because this is the only time in which we've seen a circuit break like that, in which we've limited down and then resumed trading. Okay, so I certainly think that it's worth watching as we continue to move forward. So, look at the SPY then. Are we here? 224, right? So we are now below the January 2017 low, right? So 222.73. January 2017 low is 224. So we got to continue to go out to find our next couple of levels, right? So we break through this January 2017 low, right? And then we go to 222.73, which is right the area that we're at now. And that is the December 30th, 2016 low. Then we go to this low right here that we've still got a name, and then we have a couple of more. So November what was this? November the 4th, 2016 low. Then we go down to the June 2016 low, right? And so we are getting into 2016, 2017 levels. And of course, we have what were those lows now as really important areas of resistance. And once kind of the dust settles through this, we will then begin the process of adding additional levels of resistance. We've got, of course, these gaps right here, which are some targets. This candle is wrong. It looks like a misprint here. But we have these levels of gaps that are worth watching, and then we also have some of these descending channels. Looks like we're going to continue to work on breaking through that descending channel. I might look at continuing to get short here. No reason in fighting the trend. I mean, we could go to this trade grid and then just take a look and see what kind of option premium there is. Looks like we've just broke through that level. So I mean, we go here, and I mean, even the 200, right? A lot of 185. That's 8 days away. 185 is that 130. So a lot of option premium still in some of these on the put side, a lot on the call side, right? A lot on the call side. So 8 days away. If you don't think we're moving up, what is this, 20%, right here. I mean, there's still $1 left here on some of this option premium, way out of the money. So some shorter term trades that you can certainly look at, right? Option premium here, these puts down to 120 here, 53 days away. Of course, we've got my position right here in this July that we've talked a lot about, 180, 175, and then I actually think that I'm going to roll this position down a little bit. I don't think there's any reason to keep this position on, so we might roll down to like 130 or 300 and change. So looking at making a couple of moves here just to take in some additional premium here in our S&P 500 trade for July. So we continue. I actually want to spend some time looking at our new highs. So these are our NASDAQ new highs. We'll just go to our personal. So let's go NASDAQ new highs. Okay, so let's go 1 week. 1 week new highs. So we saw a bunch of new highs so you can see here that over the last week we're seeing a little bit of an increase in new highs. Okay. So now let's go to our 1 month. So we're not seeing 26. That's it. So over here, when we're in our bull market, right, we're seeing significant movement here in new highs. We've got none right here. One of the things that I'm going to be looking for as we continue to make this transition, hopefully out of this at some point, once we finish pricing in what we foresee as long-term economic slowdown, is starting to see more and more of these making new highs, right? So 1 month, then we go to 3 month, same thing, right? So we're seeing fewer and fewer securities here on the NASDAQ making new highs over the 3 month because, of course, we're in this economic slowdown. 6 month, same thing, right? We're seeing all of this crash right here because we're in this economic slowdown and stock market crash. Again, 11 securities in the entire NASDAQ have made 9 month new highs, 11. Versus, what is this? Just over a month ago, we were making 300 new highs, okay? Finally, 1 year new highs, we've got 10. So only 10 NASDAQ securities have made new highs versus, just 2 months ago, 394 were. On the flip side, though, we go to making new lows over the last week, right? So a couple days ago, we were massive. Seeing less, but still 419 that are making new lows. 2 week, 394 that are making new lows. We'll continue to go down. 3 month new lows, 377. 6 month new lows. So what does all of this tell me, right? Like, this is when we're in a bull market, right? Bull market right through here, and then boom, seeing massive amounts of new lows coming in because, of course, we're in this economic slowdown, okay? Recession, market crash, whatever you want to call it. That's the reason. You're going to see very similar things here in our New York Stock Exchange, okay? Versus, and then you can just go in and put these in. New lows 1 year, boom, same thing, right? Exactly the same type of thing. But we're seeing less. Seeing less down from 2103, 2,123 stocks. Okay, let's take a look at gold. Of course, it's no secret that I need gold to make a move right back up in here into this area over the next week for me to get out of a couple of positions that are really quite frustrating. Love to see this curl, right? Love to see this curl here. Not really doing a whole lot except, again, maybe looking for that curl. Crude oil. So let's see here what crude is doing. Challenge that low, right, from the, what day is this? This is the 18th, so challenge that low. Looking like we're trying to continue to put in a bottom. See if we get tested here and then make a move up. Down only 22 cents percentage point from the close, but there was a lot of volatility here in this particular position. Really looking to eventually fill this gap. Got a couple of trend lines that are going to play against us, a couple of levels of overhead resistance. So got this gap, got this level at 36.37. This trend line at some point is going to play, but for now we're just looking at the support. If this support breaks, then that's our new level of resistance. All right. Put call ratio spread moving down, so starting to see a little bit more call buying power coming back versus this super high of 180. We've got our SPX gold index, so certainly came down. Gold hasn't done what we typically assume gold is going to do in this type of environment, which is to spike, right? Let's take a look at our VIX. VIX is up 10% right now. Got this little gap here. So again, not in our little box, so bearish on equities on the whole. Move over to the VIX, VXX. We're up 5% here. 5% here. So we're back in this area, significantly down from the top. And of course, UVXY up a little bit more. So a lot of volatility here in UVXY. I think it's going to be a long time before we print a new all-time low here. But of course, we do know that that is the long-term trend. So let's go to a 3-year weekly. We are back in levels last seen in 2017. So, still though down from the high, but just continuing to watch. So that's where we're at here in our volatility ETFs. Let's go through a couple of interesting charts. Just some things that I was looking at. Let's go to UAL positions. All right. So I actually got long via some short puts here in UAL. And here's my rationale. There's a lot of premium here in UAL. So I didn't go big. You can see 3 contracts, 5 contracts, 1 contract. So I went small, but I definitely saw, that there was just an ungodly amount of premium here. $10 are, so I sold the 10s, only sold 3 contracts, but you can see here that there's an expected market move of $13. So I actually sold this one right here at 64.5. So getting a lot of theta, not a lot of profit loss since open, and I'm trying to get this spread back for 30 cents, okay? So 10 there, and then I went out here and sold the 11 10s, 21, so 21, a little bit more movement. I'll take a 50% loss on this particular trade. And then I, of course, sold the Mays here. The May out 53 days at 10. I'm going to look to defend this if I can, So I'm going to look to defend this if I can. So that's the idea here. Just to see if we can't leg into some positions, collect a little bit of premium on this. I mean, I've got a great, break even. So, we can analyze tab. We just use this, So UAL, I'm expecting some level of a bailout. Our break even is $7.65, So $7.65. I think that we're probably, not going to see that. It's certainly a risky, but I think it's still worth looking at. You can really see this though in all of the airlines. Okay, so we go to our Airlines Watchlist, and so. Doesn't look like that clicked for me. Airlines. All right. So you go into something like Dow, So you seeing the same thing, okay? Not really a airline company, but similar concept. Boeing, up from 350 to 95. I actually don't know what Boeing would look like, but these are some of the kind of things where we want to look at potential opportunities. So 50. So if we don't think it's gonna 4 days, 50 cents, If we don't think that it's going to crash down to 50, lose another 50% of its value. This is a trade. That's interesting. We know that there's a floor for this. UAL, AAL, American Airlines. Nope. Let's try that. Is that right? American Airlines. Yeah. So American Airlines down a little bit, but we've got the one call 15 at a 5 delta. So just some things as we look for opportunities to get long. Not even necessarily long, just what the floor might be. We're getting really down. I mean, technically American Airlines is now a penny stock, We go back to the chart. Down from 30, so we've lost 66% of the value, Do we get a dividend? Yeah, so we get a dividend on this stock, Is it possible that they suspend dividend during this? Absolutely. right? But if we were fine buying this at 30 cents with a dividend, and we go here and we sell, I don't know, let's just sell the fives. We sell 5 shares. Would we be fine picking up 500 shares at a cost basis of $4.74 with the dividend? I think the answer is probably yes, right? If you're a long-term investor, but want to also see if you can't get a little bit of, maybe don't want to pay American Airlines now. That would be a fine trade to make, right? At least in my opinion. Okay, in my opinion. Okay, but that's kind of how I look at things as well. So, getting a little in there, let's look at something like Zoom. So, Zoom Technologies. So, do we think up, another couple of percentage points? Do we think that, it's probably bouncing back to 108? I don't. I see this here, and I see that this is probably a platform that's going to be around for a while. A lot of mispricing here, right? So if you can get a good fill, you can, looking at something like this right here, right? So if you get a good fill on some of these, you could get a nice lot of credit, risk defined, go beyond the expected move, right? This is in demand. This could be something that you go long on here in Zoom. We go to the chart, Zoom Media. It doesn't pay a dividend. Is up since really this began. Let's go end of January, right? It's more than doubled, or since December. So you'd have to take that into consideration as to whether or not you're going to make a move here. But it's certainly something worth looking at. So let's go to our scan tab. Let's go anything short, no matching symbols. So nothing here in our scan. We're going to get anything in the long? I bet we do. Waiting for results to come through. Got a couple things. Boeing, Delta, Ford. So Ford right here, down again. This is interesting, right? So potentially get something in Ford. Let's go to the Ford chart. And still paying a dividend, down from a high in July of $10. We've just seen it crater. You want to pick up shares of Ford paying a dividend for $4. It's probably at some point. At some point that becomes really interesting. So what else do we have is that Coca-Cola? I think it is. Let's take a look at Coca-Cola. Yeah, big time move. Still paying a dividend here. Not as interesting here. Not a lot of still premium, right? But not a lot of really interesting for me here. You can still get it at a discount though. $4 expected move. It's important. $4 expected moves. So you're looking at the low end of I guess $5, a little bit less. So $33.50. It's the expected move. So you could look there. Anyways, just thinking about what's in the market, right? Seeing all of these good companies probably going to be at a discount, even though our lives are fundamentally altered. So just some thoughts going in, kind of some things I'll be looking at this week. So if you have any questions, reach out to me at Ryan, RYAN, at Sell That Option. Otherwise, let's have a great rest of our day, okay? Have a great week.